Hello traders, Forex market video analysis. Last time for the week. Friday is upon us. I want to go back to talk about the Aussie Japanese yen. We've been following very closely on this one. Having said that, last time we visited the Aussie Jap was 10 days ago, believe it or not. I was just telling you about the journey towards 93.75. That was our main target back then. We knocked off that target, but immediately we engaged with a continuation, a continuous position, because right off the bat, we were talking about 89.29, but we tried to break down the move into two steps. Step one was 93.75. That was checked, but price action went straight to break that level. And I was here announcing that we're still on that move. We just got back. We just reestablished our short position, and ever since then, price action basically started to trade sideways. All of those 10 days, it was a lot of back and forth exchange in a relatively narrow range. And this is the time. This is the moment where we threw in the first trade, and a little bit later we felt comfortable enough. That was when price action came off that high, that local high, right? Almost scratched that 94.70. That's a local resistance level, and as it began to turn back down, we felt comfortable enough to throw in the second trade. Now price action is closing in on the next local support, that is 92.61. I do expect this time that it will break that level and start marching downwards. There's another obstacle at 91.63, so we're gonna keep it relatively conservative as far as the position size goes until price action breaks below 91.63. That's gonna be our cue to get more aggressive. Again, we're aiming at 89.29. As you can see, we got another obstacle at 90.13. 90.13 can be a secondary target. However, final destination will be 89.30, which means we got we got almost 400 pip to go still, right? I really like the way price action behaved yesterday, because if you think about it, price action started on the upside. It started to hammer and then change direction very swiftly, and as you can see, everything happened right across that 93.75 level, right? Take a look at the open price here. It's 93.70, right? Slightly below. Basically what happened was price action from a couple of days ago, well, it closed that day at 93.90, right? That's 15 pip above, and then it gapped below 93.75 just to open at 93.70. So that was a very interesting gap, right? Just right across that level. And mind you, it started hammering upwards and then turned around very aggressively, ended up negatively. So that's again a strong sign that price action left, that the train left the station, so to speak, and we're on our way down, right? Which is exactly how we predicted that move. Now another interesting point that I should mention is the way price action is slicing. Check out the weekly chart. Last week it broke. Well, last week it started off pushing itself off 93.75, right, to close below 92.71. That was a big statement. This week, coming on with a technical correction, now we can see it's just slicing that same 93.75 level, meaning it was trying to break back above, failed. That's a clear sign that we're still on track, south, right? 90.13 and 89.29. I actually think price is going to go beyond 89.29. It's just the safest spot to aim for. It's probably going to chase the previous major low, 87.30. Imagine that. So that's almost 600 pip from what we're trading right now. Anyway, that's pretty much it. Stop loss level 95. 25.20 if I'm not mistaken. Let me just confirm that before we wrap this up. It is 25.20. In fact, we can probably start adjusting the stop loss level a little bit. I guess 94.90 should be good. 94.90, that's our new spot loss level. Adjusting the stop loss level by 30 pip, closing in a little bit. That's pretty much it for this time and for the week. Moving on to our next video, cryptocurrency market. That's what's coming. See you there.